you want us to look at, please let me know. Drop it in the comment section. Drop it in the comment section. Okay, GBP, JPY, GBP, Australian dollar, and USD card. Okay, let's start with GBP, JPY. GBP, JPY. My bias for GBP, JPY for the week still remains bullish. Okay, my bias for GBP, JPY for the week still remains bullish. You can see I still want to see price pull back to this area. Can you see these are the areas I am considering buying GJ? You can see I've already identified the levels. Now let me show you why I'm considering buying from those zones. I believe you can hear me. Am I audible? Okay, so let's start with the good. You see how today's candle closed? It's closed as this looks like an armor right here. This looks like an armor. Let's go down to 4 hour. Let's go down to 4 hour. Okay, so this is what we have on 4 hour. Okay, there's a bullish pattern. Now, why I want to see price pull back to this area before I buy. First, if we apply Fibonacci from this swing low to this swing high, all right, price already pulled back, right? It's already pulled back to a discount area. Okay, it was already pulled back to a discount area, but I was expecting GJ to pull back to, there's a fair value gap, I think, yeah. After the formation of this candlestick, I think there was a fair value gap. Let's see. I think a fair value gap was created. Okay, we have a fair value gap here on okay, no fair value gap here. Let's go to 15 minutes. Let's go to 15 minutes. So I was expecting GJ to pull back to that area. You can see the fair value gap I identified as a discount area. I was expecting GJ to pull back to this area before buying. But as you can see, it's been buying since yesterday. It's been buying since yesterday, but I'm still hoping that it will pull back to this area before going bullish. So this is where I'm considering buying GJ. Buying GJ, one would have entered by after the formation of this 4 hour candle, right? After the formation of this 4 hour candle, this bullish candle. So entering a buy now will be at a very high risk. As far as I'm concerned, this will be very high risk. Buy the risk, your stop loss will be at this point. How much would you have made now? This is just 66 pips. 66 pips. So I would advise you wait for price to pull back. Okay, wait for price to pull back before you go bullish, unless you're comfortable with this risk. 84 pip risk. 84 pip risk. And if you are buying from, sorry, the risk is even more than 84. What am I saying? If you are buying from the current market price, your stop loss is about 141 pips. And what will be your reward? You want to set your first TP at this high. So this is 134. Now look at the risk. 141 is even less than, is higher than the reward. So if you are considering buying GJ, patiently wait for price to pull back. Probably after the formation of this 4 hour candle. After the formation of that 4 hour candle is likely a fair value gap was created. So if you want to risk buying, you should wait for price to pull back and fill the fair value gap that was created after the formation of this bullish reversal pattern. Okay. So after the formation of this pattern, this is a bullish reversal pattern. Let's go to 1 hour. What do we have on 1 hour? Okay. So you can see the pattern we had on 1 hour after the formation of that 4 hour candle. This is a bullish reversal pattern. So if we're working with the 1 hour time frame, we should have entered after this the formation of this armor. The next candle close bullish. That's a valid buy setup, right? That's a valid buy setup. So let's go to 15 minutes. I'm sure if a value gap was created, okay, this is 15 minutes, or you could just apply your Fibonacci, take it from the swing low. If you can't identify if your value gap, just apply Fibonacci from the swing low to swing high, wait for price to pull back to a discount area before you buy. Okay, that will be my take on GJ. Don't buy from the current market price. The risk is too high. Patiently wait for price to pull back to this area. If price pulls back to this area and you see a good buy setup, that is a bullish pattern forms inside this gap or after this gap has been filled, then if you take your buy from there, and let's say it's closed at this point, and you buy from this point, this is about 60 pips, right? 63 pips. Your stop loss should be yes, it's something pips. Then your reward. Let's see the reward. Let's see the reward. So if you buy from so if you buy from this area and you're setting your TP at this area, the chart just updated. This wasn't what I was saying. Okay, this wasn't what I was saying on GJ. Let me go back to 1 hour. Okay. So if you are buying from this point, say your reward here should be this high, right? And your risk will be this. That's like 1-to-1 risk reward. Okay, but if you patiently wait for price to pull back to this area, your risk reduces to, let's say you buy from this point, your risk reduces to 63 or 65 pips. Is about 200 pips. That's like 1:3 risk reward. Okay, so if you're considering buying, like I said, my bias for GJ still remains bullish, but I want to see price pull back to this area before I buy. I hope that is clear. So that's my take on GJ. Let's look at USD card. USD card. My bias for USD card this week is bearish. Okay, my bias for USD card is bearish. Okay, so let's see. So I think what has played out so far since the market opened was clear liquidity. Let's start with the daily time frame. So you can see this high, this high. I think that's the reason for the bullish move we saw yesterday and today. Yeah, this clear, this liquidity. Now, after this liquidity has been cleared, we have a fair value gap here, which might be their next target. Okay, this next fair value gap, this fair value gap here could be their next target. Now, this is daily. If you go to 4 hour, the fair value gap on 4 hour might be different from what we have or what we're seeing on daily. Let's go to 4 hour. So on 4 hour, you can see the fair value gap here. So I'll prefer working with this. So they might want to come for this fair value gap before going bearish. Okay, they might want to come for that fair value gap. They might want to come and fill this gap before going bearish. Okay, now here we have what looks like a bearish reversal pattern, right? Looks like a bearish reversal pattern. You might not be able to identify that on the 4 hour time frame, but if you go to lower time frame, I'm sure we'll be able to identify a bearish reversal pattern on 1 hour or 15 minutes time frame. Now, liquidity residing at this previous high has been cleared, and there's a possibility for price to come and fill this gap before going bearish. So if I want to take a trade, because I have what looks like a sell setup here, if I decide to take a trade from this point, it means my stop loss must be above this area, maybe 10 or 15 pips above this area, right? If I'm going to take this trade from this point. So let's assume I take a sell from this point. Okay, this will be about, let's say 15 pips above this level. That's about 87 pips. Are you comfortable with such risk? 87 pips. If you are not comfortable with such risk, that means you have to wait for price to pull back to this zone before you sell. But everything in trading is probability. There is no guarantee that price would pull back and fill this gap before going bearish. Are you getting me? So what you need to do in this case, if you insist on taking the trade, reduce your lot size, reduce your risk on the trade. So let's assume your risk, the risk you want to take on this trade, you want to lose maybe $50 on this trade, $50 on this trade, and your stop loss, if you decide to set it at this point, is 85 pips. So your lot size on this trade will be 0.05. Yeah, 0.05. That will be your lot size. 0.05 times 85 pips. That would give you close to 50 pips or $50. Okay. So if this risk is too high for you, then you might have to wait for price to pull back to this area. If price pulls back to this area, your risk will not be more than 30 pips. If you are selling from this area, it won't be more than 30 pips. So you trade setups that aligns with your risk appetite. Okay, that's in line with your risk appetite. Okay, are you getting me? So if I decide to sell from this point, let's see now. For me to sell now on 4 hour, we have what looks like a bearish reversal pattern. Let's go to 1 hour. Though not valid yet, not valid on 4 hour. Let's go to 1 hour. So on 1 hour, you can see the patterns we have here on 1 hour. Okay, this is a bearish reversal pattern. We have what looks like a shooting star here, though not a valid shooting star. Okay, I wish this support here, the market closed below this support. That would have been valid on 1 hour. Okay, you can see price came, tested the support. If you go back here, you would see that we had a resistance there, which became a support. Price came, tested this support area, and there was a strong rejection from that area. And you can see the pattern that formed in that area. This looks like an hammer. So we can't jump in and start selling until this support is broken. Okay, until this support is broken now, we've identified on 4 hour, we have what looks like a bearish reversal pattern, though not valid. 1 hour also is not confirmed yet. So we need to go down to 15 minutes to ensure that there's a shift in market structure on 15 minutes time frame. If there is no shift in market structure, no trade. Are you with me? If there's no shift in market structure, no trade. Okay, the setup is not valid. So here on 15 minutes, I believe the shift in market structure should occur at this low. At this low, let me go to this charts. Let me see the zigzag. Okay, so you can see the last zigzag that was used, this indicator that was used to clear liquidity. This low was used to clear this high. Okay, so if price breaks this low, we could say there is a shift in market structure at this point. Are you getting me? If a candle closes below this low, we could say there is a shift in market structure. You can see, so price attempted to break this low, but it could not. So with what we have here, USD card is still bullish, but you cannot buy USD card at the current market price. I've already told you, when you open the chart, 3 things you should look out for. Where is price coming from? You need to know where price is coming from, where the price start going up or where the price start going down. Now, where is price at the moment? And where do you think price is going to? That's why you have the chart. Okay. Look at the chart when you open it. Where is price coming from? Has it been bullish for how long has it been bullish? For how long has it been bearish? And when you look at the chart, you know that this trade, you should have entered at this point. But at the time you opened your chart, the market is trading far above that area or that level or that price that you're supposed to have executed the trade. Patiently wait for price to pull back. Okay, patiently wait for price to pull back before you enter the trade. I hope you are with me. Don't rush into a trade. Patiently wait. Patience pays in this business. If you are not patient, you cannot make money in trading. And that's one of the reasons most of you are blowing accounts. Impatience. Impatience. If you are not patient, forget about making money in trading. Forget about making money in trading. If you are not patient, the market will humble you. You will keep blowing your accounts. Okay, you keep blowing your accounts. So on 15 minutes, as we can see here, there is no shift in market structure yet. No shift in market structure. So you should wait for a candle to close below this level. You can see I've already identified this low. I'm waiting for a candle to close below this low. Okay, some will identify this level. Okay, some will say, okay, I want to wait for price to pull back to break this low here. This will be a shifting market structure for some persons. This low here will be the most recent higher low for some persons. But I'm working with this one, this low, okay? Because this low was used to clear liquidity. This low here also was used to clear this liquidity reserve at this high, okay? So now, another thing I do is I need to know the risk involved. I want to ensure that the difference, okay, the risk here, the market risk should not exceed 40 to 50 pips. 40 to 50 pips. Okay, so if I'm entering below this area, my stop loss should be around this area. So this will be about 50 pips because I'm going to set it few pips above this high. Okay, 50 pips. But as you can see, we have a fair value gap here. This gap was not filled entirely. So there's still possibility for price to pull back to this area before going bearish. This is likely going to play out before London session. Okay, it's likely price is going to, as you can see on 15 minutes, what we have here is a bullish reversal pattern. On 1 hour also is a bullish reversal pattern. So the pattern we have on 1 hour and 15 minutes and 5 minutes and 1 minute is bullish right now. That is likely going to play out before the pattern on 4-hour daily will play out. But you know, if you're trading lower time frame pattern, you know that the movement will be for a short term, not long term. Okay, so that's my expectation on. So if price pulls back to this area, look at it this way. If price pulls back to this area, let's assume price pulls back to this area. You can, as you can see, I've applied Fibonacci. I want to see price pull back to a premium area. So if price pulls back to this area and you decide to sell from this area, your risk will be less. That should be your utmost priority, right? That should be your utmost concern, the risk involved on the trade, the risk and the reward. Your reward must always be higher than the risk. So you consider the risk involved. If price pulls back to this, now, this is what I do. If I'm to take the trade from this point, I will still take a risk of, let's say, 40 pips. I'm not going to set it at this high. If I have to use this high, that will be about, let's say 15 pips. I'll just set it 3 pips above this level. Let's say 15 pip risk. But I don't do that. If price pulls back to this area, I will take a sell and my stop loss will still be 40 pips, which is the difference from this point to this point where market broke out or change structure. Okay, this will be 40 pips, right? This will be 40 pips. So my stop loss will be 40 pips from this point. That will be my stop loss. I'll still use that same 40 pips. It is after price breaks out from this low, after the shift in market structure, that is when I would adjust my stop loss to this area. Are you getting me? Are you learning? That is when I will adjust my stop loss to this area because this area is still an area of liquidity. You can see we have relative equal highs, right? We have relative equal highs here, and I know they might still want to come for these highs. So I cannot set my stop loss using this level or just set it 3 pips. So I'm still going to use, because the shift in market structure has not occurred yet. Are you getting me? The shift in market structure has not occurred. Price just pulled back to a premium area. I decided to sell from there, but the shift in market structure has not occurred. So I need to set my stop loss several pips above this area. Yes, they might still go for my stop loss, but it's safer to set your stop loss several pips above this level than using these highs. They can easily hunt for these highs, especially when a major news is expected. Like this week, we are expecting FOMC and CPI. I cannot use 10, 15 pips as SL. There is a high probability they will go for those levels. So I have to give price enough room to breathe. That's why I would use the same 40 pips I'm supposed to use after the shift in market structure. I hope you're getting me. So that's my take on USD CAD. If you're considering selling USD CAD tomorrow, you either wait for price to pull back to this area before you sell, or wait for a shift in market structure. Like I said, if you want to sell from this point, you go in with your stop loss should be a few pips above this level. Maybe you use 40 pips as your stop loss. But if you wait for price to pull back, still use the same 40 pips as your stop loss. Sometimes what I do is this. Let's say I want to risk $50 on this trade. I could go in with $25 after the shift in market structure. I could go in with $25. If price pulls back to this area, okay, I still have $25 to play with. And when price pulls back to this area, my risk will reduce on this trade, right? If price pulls back to this area, the second trade I'm going to take, the risk will be less. So since the risk will be less, it means I can use high lot size on this second trade. Are you getting me? So I could use 50% of the amount I'm supposed to risk on the trade, on the first trade. And when price pulls back to this area, I could go in with the remaining $25. And at this point, the risk will be less, and the reward will be high, and the lot size also will be high. Are you getting me? So by the time price pulls back to break this low, this second trade would have been in profit, and this first trade I took would also at least would have been in little profit. I hope you're getting me. Any question on this? Any question on this? Any question so far? Any question? Any question? Any question? Okay, so that's my take on USD card. Remember, we are expecting FOMC tomorrow by 7 p.m. That is the only thing that would interfere or disrupt this plan. That's the only thing. Only the fundamentals can disrupt this plan. Technically, USD card is set for sale. Technically, USD card is set for sale. It is set for sale. Okay, so that's it for USD card. I hope you guys understand my risk management concept. I hope you understand the concept. I hope you understand the concept. Okay. What I'm sharing with you guys is premium information. It's premium information. Mr. Will, why is your mic not on? Okay, so let's move to the next page, GBP or C. That might be the last pair we'll be looking at. Let me check my system battery. Okay, still up. Okay, so let's check GBP or C. Okay, let's start with the daily. Today is Wednesday, Monday, Tuesday, Wednesday. GA it's been bullish. GBP, let me see the weekly chart. Okay, so with what we have here, I think GA is bullish. Last week, candle closed as an hammer. It closed as an hammer, bearish hammer. And after the formation of a bearish hammer, you have to wait for the next candle to close bullish. So if we are focused on the weekly time frame, which is for swing traders, we would wait for this current week candle to close. If it closes bullish, then we should expect more bullish move next week on GBP Australian dollar. Now you would see here also, I think a fair value gap was created, and that pullback is likely was to fill this fair value gap. You can see this fair value gap that was created here. This pullback could be to just fill this fair value gap, and that they have achieved. And the market is currently trading above that fair value gap. If we also apply Fibonacci from this swing low to this swing high, let's see where price pulled back to. So you can see price pulled back to a discount area. Can you see that? A discount area. So this week one would have entered buy after the formation of this bearish candle, because if you go down to daily time frame, you would be able to identify a bullish reversal pattern on a daily time frame. So this was last Friday candle. Yeah, I think I'm correct. This was last Friday candle, right? Yeah, this was last Friday candle. This looks like a Marubuzu. So this is a bullish reversal pattern on this is daily. Let's go down to 4 hour. You see it clearly on 4 hour. We will be able to identify a valid bullish reversal pattern on 4 hour. So you can see on 4 hour, we have several candlestick pattern here indicating change in trend. Can you see this? We had several bullish reversal pattern Yeah, the fact that a resistance was created here, and this candlestick broke out from that resistance, that is a valid confirmation for buy. You can see this resistance here. This candlestick broke out. That confirms a valid buy setup. Okay, so my take on GA, GA is still bullish. GA is still bullish. GA is still bullish. That's my take on GA. GA is still bullish. So at what price should you consider buying GA? At what price? At what price? Let's go to 4 hour. So a resistance was created yesterday. This was the resistance. Wait for 4 hour candle to close above the resistance. As you can see, if you go back here, you will see the reason for the rejection. This rejection, you can see this resistance, resistance. This could be the reason for the rejection. Can you see this resistance, that could be the reason for the rejection. So if you want to buy, I would advise or suggest that you wait for price to break that resistance, this resistance. If a 4 hour candle closes above this resistance, then you could consider going bullish on GA. Okay, you could consider going bullish on GA if that resistance is broken. Okay, could consider going by. As you can see, we had a fair value gap here. Probably price just put back to fill this gap here, this fair value gap. Okay, that could also be the reason for this pullback, but we still have a fair value gap here also that is yet to be filled. So these are the areas, if I'm to buy, it's either price breaks out the resistance for me to buy, or I wait for price to fill these fair value gaps. Okay, this has not been filled entirely, right? So it's either price fills this fair value gap, okay? Then we have another one here. So these are the areas I would consider buying GA if I'm to trade GA. Okay. So after filling this fair value gap, I look at the candlestick pattern that forms here. If it's a bullish reversal pattern, as what we have at the moment looks like a bullish reversal pattern, but we need to wait for this candle to close. If it closes as an hammer, then one could risk buying. But if price breaks out from this zone, then they are likely going to push the price down to this area. So you either buy from this point or buy. Now, if you are buying, this is 4 hour time frame, there has to be a shifting market structure on 15 minutes time frame. There has to be a shifting market structure on 15 minutes time frame. So if you are buying from this point, you need to go down to lower time frame. Don't just say because a bullish reversal pattern formed on 4 hour time frame, you just jump in and start buying. You need to go down to lower time frames like 15 minutes. If you're working with 4 hour, you need to go to 15 minutes and ensure that there's a shifting market structure on 15 minutes. So this is what we have on 15 minutes. Okay. Is there a shifting market structure on 15 minutes? Not yet. Not yet. Okay. Shifting market structure should occur, or breakout structure should occur at this point on 15 minutes time frame. Are you getting me? And this is a resistance level. So wait for this resistance to be broken before you consider buying GA. My bias for GA this week is bullish. Is bullish based on how last week candle closed. I hope that is clear. That is clear. Is there any other pair you want us to look at? Let me know in the comment section. Which other pair do you want us to look at? Any question? If you have any question, please let me know. Just drop it in the comment section. Is there any other pair you want us to look at? Let's look at GU before I think I have a trade on GU. Let's look at GU before, okay? So I took this trade on GU, okay, yesterday. I've been holding this trade since yesterday. Okay, USDCHF. I still have the system might go up anytime soon, and I want to try to upload this video tonight. Okay, let's look at GU. USDCHF is bearish, okay? My bias for USDCHF is bearish. USD, GBP USD, I'm buying GBP USD, I'm still holding the trade. I'm hoping it's going to clear liquidity side on this high and also this high. That's my target. My plan is this on GU. This is where I was supposed to enter this trade on GU. Okay, this is 15 minutes. This is where, as at yesterday, this is where I ought to have entered the trade, but I didn't use 15 minutes shifting market structure. I think I used 1 minute or 5 minutes. Yeah. This is it. This at what point did I enter this trade though? I think it's 5 minutes or 1 minute that I use for the entry. Okay. Okay, I think this is what I used yesterday. Okay, so this is it. I think, yeah. This okay, I think this is where this is the shift. Okay. This was used to clear this liquidity. There was a shift in market structure. Okay, at this point, I applied my Fibonacci from this point to this point, waited for price to pull back to this area. This is where that's the reason I took this trade yesterday. So what I did there was after declaring liquidity here, I applied my, you can see, and waited for price to pull back to this area. You can see, waited for price to pull back to this area before I executed the trade. So that's the reason I took this trade. I used this is 5 minutes time frame, okay? And I'm still holding and I'm hoping that to get to this 15 minutes, this high. Now I'm planning to add more trades. If it breaks this level, you can see this is 15 minutes high that was used to clear liquidity reset at this previous low. So I'm planning to add more trade. Once price breaks this high, I'm going to add more trades. Okay, I'm going to add more trades. Okay, so I'm still holding G. Technically, G is supposed to buy, technically, but we don't know what FOMC has for us tomorrow. We don't know. So anything can happen in the markets. The only thing that can protect your account is stop loss. Okay, stop loss. Okay, so that's my take on GU. GU is still bullish at the moment. Okay, GU is still bullish at the moment. So let's quickly look at USD CHF. Do I have USD CHF on my list? After this, please would have to end the class. USD CHF. Okay, so let's start with the daily. Yesterday was bullish. Okay, price tested this resistance level. Okay, tested this resistance level. Now we still have a fair value gap above here. They might still want to come fill this fair value gap. Okay, they might still want to come and fill this fair value gap before going bearish. This fair value gap, they might want to come and fill this gap. They might use FOMC or CPI to come and fill this gap. Okay, so you can see from Monday to date, I think USD CHF has been in a range, right? USD CHF has been in a range. Let's go down to 4-hour time frame. So I think this is updated. Yeah. So this is what we have on 4-hour. So it's been a range kind of. Okay. It's been a range. So this is what time frame is this 4-hour time frame. We have where you can see this pattern. You can see this pattern. This is a bearish reversal pattern, right? We had a fair value gap here that was created, and that pullback could be to fill this gap that was created here. Okay, that pullback could be to fill this gap that was created here. Okay. Now we have this bearish reversal pattern. Now there has to be a shift in market structure of 15 minutes time frame. So let's go to 15 minutes time frame. So if this is a expanding top, this candle should be bearish before we confirm this to be a valid bearish setup, right? This candle, this current 4-hour candle should close bearish. If it doesn't close bearish, we can't take this as a valid setup for sell. No. So let's go down to 1 hour. Let's see what we have on 1 hour. Okay, this is 1 hour time frame. You can see a support was created here. Price came, tested the support, strong rejection from that support. You can see. So it has been in the range kind of, right? You can see. So like I said, there has to be a shift in market structure. So at what point would shift in market structure occur on 15 minutes time frame? At what point will shift in market structure occur? So I would suggest this is high, low, high. You can see high, low, high, and price has refused to break this previous high. Okay, so we have, so shift in market structure should occur in 15 minutes. So if you're considering selling, wait for this low to be cleared. That's my take on USD Wait for this low, preferably wait for 4-hour candle to close below this low. If 4-hour closes below this low, by 9 a.m. tomorrow, 9 a.m. tomorrow, if the market is trading below this low, you could risk selling USD Okay. If you want to trade tomorrow, please try sell before FOMC. If you're able to make like 40, 50 pips, you can exit the trade or close partials before FOMC, please. Okay. So if you are selling from this point, you can set your stop loss initially. You can use maybe 50 pips. Don't set it here. They can easily clear the stop losses reside at this high. So you can set it at this point. You are selling from this point. It's about 50 pips. Set your stop loss 50 pips, okay? And you can reduce the risk after this low. Patiently wait for price to close below this low before you adjust your stop loss maybe to this area. I hope you're getting me. Your initial stop loss should be at this level. If price breaks this low, you cannot bring your stop loss down to this area. I hope that is clear. I hope that is clear. So I wish we could spend more time, but I have to end the session, okay? So that I'll be able to upload. I hope the system will be on so that I can upload the video tonight on YouTube so that those who didn't participate in the live session can watch the replay. I appreciate you all for your participation, Mr. Deji, Mr. Evans, Mr. Max. Okay, appreciate you all for your participation, Mr. Will. I don't know your audio is not on, Mr. Will. So that'll be all for tonight. I wish you all a great night. If you have any question, just drop it on the what's it called? On the WhatsApp group. Do have a wonderful night.